So what do you have to say about the Fed? Because here we are with all of the metrics that you're bringing up.
Yep.
They do not support a Federal Reserve that's going to raise interest rates 4 times this year, and that's why the president has been so upset about this. Janet Yellen, meanwhile, the former chairman of the Fed, is speaking out against the president's comments about the central bank. She says that they're counterproductive, that don't call the Fed crazy and loco, it's counterproductive. And yet you're saying they are crazy.
No, I don't think they're crazy.
Okay.
I think the Fed has been behind the curve for a long time. I said a couple of years ago that they were far behind. In 2013, when the economy started to recover, they should have raised rates back up into 3-4% range. Short-term interest rates for 100 years have been equal to nominal GDP. Okay, nominal GDP today is somewhere around 4 or 5%. So short-term rates should be there. Now, John, you asked what's going to tilt us into recession? What's the catalyst? I think it's an inverted yield curve. I think the short-term rates should keep coming up. We should go ahead and have a nice cleansing recession. There's a lot of zombie companies. 14% of companies in the S&P couldn't pay their debt service with their next 3 years EBITDA. Those companies need to go away, and the strong companies need to survive.
But so far, if people are selling longer-term treasuries, that's a sign that the economy looks okay, does it not? Because we've seen a kind of stability in the yield curve, and it's not anywhere near even flat at this point.
Oh, no, it's very flat. It's the flattest it's been in years.
Historically, but not in years. It's not the flattest it's been in years, is it, Lindsay?
Oh, absolutely.
Yeah, it is.
Okay.
Yeah. I mean, it came up a couple basis points.
Yeah, but it's almost inverted. And the reason the 30-year is not rising as much as the short term is people believe that the Fed is making a policy error. That's what the market's telling the Fed. As the Fed raises rates, the long end falls, and if it does invert, that would be the market saying we don't believe the growth is there.
Why should the Fed keep raising when inflation is right at 2%? And it lately has been rolling over.
I think we all agree the Fed shouldn't keep raising.
Well, I look at it as I actually don't think that CPI is a very good measure of inflation. I think there's a lot of costs that we all spend money on that are significantly higher than that. I think that nominal interest rates are a little bit too low. I don't think they should be 5 or 6%, but I think they could be a little higher. The other issue is when you're late in a cycle, you need to have a little bit higher rate so that when the cycle turns and when things start to get negative, the Fed can cut again. They really are out of tools if we do go into recession.
But you want to raise rates so much that you cause a recession that you have the ability to fight because you've raised rates so much.
I'm a big believer that recessions are a natural part of the business cycle, that we shouldn't have attempted to abolish them in the first place. I would have thought that the loco part of the Fed was keeping 0 interest rates for 7 years.
Yeah, that was definitely
That's what I'd call
that
loco.
was up there with loco. I agree with you. Real quick, cryptocurrency, you like it?
Love it. Yeah, I'm wearing my crypto tie today. Look, we think that the equity markets are the beginnings of a bear market. We think the crypto market's the beginning of a bull market. And look, I'm a big believer that sound money, right? What non-fiat currency, since 71, currencies all around the world have started to explode. Look what happened in Zimbabwe, Venezuela.
Yeah.
And when you issue too much debt and the government can't support that debt, currencies have to devalue.
And Fidelity is going to store and trade digital currencies for hedge funds.
Huge. That is a huge development. Yeah. And what it says is that the Great Wall of money, the institutional investors are coming for this asset. And it is the first alternative asset, really in my career, that delivers on the promise. It actually gives you better returns.
Or something else?
Love Bitcoin. We think that is digital gold. Ultimately, may be a reserve currency, not a reserve currency. But there are some other things. Ethereum is more of a protocol, like a platform. It's like the www dot of the Internet of Value, or what I want to dub the trust net. So we went from the Internet to the mobile net, now the trust net.
All right, we'll leave it there. Mark, great insights from you as always. Good to see you.
No, thanks
so much, Mark Yusko.